The AP market of 2025 holds a fascinating secret that most dealers won't tell you. Remember when everyone said steel Royal Oaks were the only ones worth chasing? The market is telling a different story now. Some precious metal references are soaring past their steel counterparts, while certain sure bet models sit quietly below retail. Even within the same product families, we're seeing dramatic price variations that few could have predicted. Welcome back. My channel provides independent market analysis. I don't do paid posts or sponsorships. I buy the data from watch charts to bring you the latest numbers. Consider this: Rolex and Patek are both showing roughly 13% gains across much larger collections, 147 and 101 models respectively. AP is achieving their single-digit growth with only 78 models in production. So, looking at these numbers, we're seeing a clear separation in the luxury watch market, a tale of three brands swimming upstream while everyone else faces significant headwinds. But for AP, maintaining this position may require something more than riding the Royal Oak wave. Remember when conventional wisdom said steel Royal Oaks were the only smart play? The market is painting indeed a different picture in 2025. While steel models are still commanding impressive premiums above retail, it's the pink gold variants that are showing truly remarkable strength, particularly in the chronograph models. What we're seeing in the data is fascinating. The baseline steel Royal Oak 41mm brings a healthy five-figure premium, but its pink gold siblings push even higher. Perhaps more intriguing is how this pattern intensifies with chronographs. The steel chronograph maintains a strong position, yet the pink gold chronograph takes the premium crown among these four references. This tells us something crucial about today's AP market. Material choice is no longer simply about preference. The old rules about steel being king might need a serious update. Now, here's where the Royal Oak story takes an unexpected turn. The Offshore collection, once the bold favorite of the AP lineup, is telling us something remarkable about changing buyer preferences. Look at the market data. We're seeing a clear inverse relationship between case size and market performance. The larger 43mm models are experiencing significant market corrections, with some variants trading well below retail. What's particularly striking is how this affects precious metal versions. The premium typically associated with gold and platinum seems to evaporate in those larger case sizes. Now, the real surprise comes from the 42mm titanium models, which are showing notably better value retention than their larger siblings. This suggests a subtle but important shift in the market. Buyers are increasingly favoring wearability over risk presence. Perhaps most telling is how the traditional size premium has completely reversed in the secondary market. Watches that command higher retail prices due to their larger cases are facing steeper discounts when they change hands. These aren't watches flying under the radar. They're rewriting the playbook on what drives value. Take the double balance wheel 41mm. While everyone's been chasing the standard Royal Oaks, this horological masterpiece has quietly become one of the hottest tickets in the game, commanding nearly $50,000 over retail. But the real insider secret? The extra thin 39mm. At almost $32K over retail, it's proving that sophisticated collectors are increasingly valuing classical proportions and technical refinement over flash. The 37mm reveal another fascinating trend. They're showing rock-solid premiums regardless of variant. We're seeing a sustainable shift toward more versatile sizes, not only a temporary market whim. And here's what many are missing. The 50th anniversary ceramic chronograph is becoming the new blueprint for what modern AP collectors value. The combination of innovative materials and heritage design is creating serious market momentum. These models are emerging as the new vanguard of AP collecting. The question isn't whether to look at these pieces, but which one will emerge as the next market leader. Now, we do need to address the elephant in the room, the Code 1159 collection. This is where the market is sending an unmistakable, clear message about AP's attempt to diversify beyond the Royal Oak. The numbers tell a sobering story. Every single Code 1159 model trades below retail, with discounts ranging from concerning to severe. What's particularly striking is how the precious metal variants, which should represent the pinnacle of the collection, are actually suffering the steepest drops, losing up to 45% of their retail value. Even the seemingly safer steel and ceramic models are not immune, though they're holding up marginally better with losses in the 24 to 26% range. When the best performer in a collection is still showing a quarter of its value evaporating, we're looking at a fundamental market rejection. Now, this creates a fascinating paradox in AP's portfolio. While certain Royal Oak references command massive premiums, the code 1159, with identical movement quality and brand heritage, represents a serious value trap for unwary buyers. In a market where knowledge is power, understanding this disparity could save collectors from costly mistakes. Let's shatter a dangerous myth in today's AP market. Diamonds are not your premium protection plan. The data tells a stark warning story that every collector needs to hear. Think paying an extra 20 to 30% for factory diamonds guarantees better market performance? The numbers say otherwise. While AP charges significant premiums for diamond set pieces at retail, those premiums largely vanish in the secondary market, sometimes dramatically so. Look at the 37mm steel models. That hefty diamond premium you paid at the boutique, almost meaningless in resale value. It gets worse with precious metals, where diamond set versions can actually underperform their standard siblings despite much higher initial costs. The Lady chronograph tells the most cautionary tale. Diamond models struggling to maintain any meaningful premium over non-diamond variants. This isn't about the diamond's beauty or craftsmanship. It's about market reality versus marketing promise. The key lesson for collectors: never assume that diamonds will protect or enhance your investment. The real value drivers remain the fundamentals: reference, materials, and complications. When we look at AP's biggest market value drops, we're seeing a revealing pattern that every collector needs to understand. It's about which segments of AP's portfolio are struggling to find their market. Leading the depreciation pack is the white gold offshore diver with an astonishing 54% drop from retail. Right behind it, white gold code chronographs losing 45% of their value. Notice something? White gold models consistently show the steepest declines, challenging the traditional premium associated with this metal. The code 1159 collection appears multiple times in this ranking, with both automatic and chronograph versions in precious metals losing 35 to 45% of their value. Even more telling is how this depreciation remains consistent across different complications within the collection. What's particularly striking is seeing the GMT Tourbillon, here a complex watch with significant horological merit, still facing major value drops. This suggests that even exceptional complications are not immune against market corrections. The presence of the titanium Offshore 43 at the better end of this chart, still showing significant losses, sets up an interesting perspective of how modern materials are performing in today's market. What this data ultimately reveals is a market that's become increasingly selective, not only about brands or models, but about specific combinations of features, materials, and positioning. Here's where we expose one of the luxury watch market's most fascinating contradictions, the AP waitlist paradox. Look at this scatter plot carefully because it shatters some common myths. The most striking revelation: the watches with the longest waitlist are often the entry-level steel models, typically priced around 25 to 40K. These pieces command market premiums up to 90% over retail, despite, or perhaps because of, being the most affordable AP offerings. One thing to note: for our analysis, we are assuming market demand as a proxy for waitlist demand. The logic is simple. Higher secondary premiums drive up waitlists. Actual waitlists will, of course, depend on your history and location. Now, here's where it gets interesting. As you move up the price scale toward 80,000, the waitlist intensity actually decreases. Those high-end precious metal pieces, often available with minimal weight despite their more exclusive positioning, the market premium drops accordingly, sometimes even turning negative. This creates a bizarre inverse relationship. The harder a watch is to obtain at retail, the lower its actual price point tends to be. It's almost as if AP's allocation strategy is working against traditional luxury market value, where higher prices typically signal greater exclusivity. The most telling data points are those green dots, low-weight models typically trading below retail. These aren't necessarily inferior watches. They're caught in the crossfire between artificial scarcity and real market demand. This is about the disconnect between AP's distribution strategy and the genuine market dynamics. Now, let's look at specific examples for the waitlist. Remember, we're using market demand as a proxy for waitlist demand. We're going to start with the crown jewel, the jumbo extra thin. That's 88% market premium isn't a mere number. It's a clear signal that this is essentially a VIP-only piece. Despite being one of the lower price models at $36,000 retail, it's arguably the hardest AP to obtain through official channels. The 41mm and the 37mm steel Royal Oaks reveal another layer of the allocation game, both sitting around $28,000 retail, but commanding 39 to 40% premiums. These are what we call the relationship builders, the pieces AP boutiques use to establish customer history. But here's the twist. The smaller 37mm actually commands a slightly higher premium despite its lower retail price. Moving into the high difficulty tier, we see something curious. The steel chronograph and double balance wheel tell two very different stories. The chronograph requires a purchase history for a relatively modest 27% premium, while the technically superior double balance wheel commands 64% over retail, but actually is easier to obtain. This suggests that complexity and price point don't necessarily correlate with allocation difficulty. Now, where the AP market shows a stark segmentation and some surprising opportunities, the 41mm pink gold Royal Oak represents an interesting case. Despite being modestly difficult to obtain, it commands a healthy 44% premium. This suggests that even with easier boutique access, genuine demand is driving the market. Just expressing interest might get you on the list, but that premium indicates strong secondary market appetite. Now, we hit the first real market warning sign, the Royal Oak Offshore in steel. A 20% discount despite moderate availability tells us the market is speaking clearly about this model. The variable by boutique note is particularly telling. When boutiques have different allocation policies for the same watch, it usually signals softening demand. Moving to regular availability, we see the full extent of the Colt 1159's market challenges. Both the automatic and chronograph versions are not only merely available, they're trading at significant discounts, 26% and 29% respectively. When a chronograph from AP trades at nearly 30% below retail, while being available for immediate purchase, we're seeing a clear disconnect between positioning and market reality. Now, despite all the issues, AP continues to demonstrate remarkable strength in its core offerings while navigating the complexities of today's luxury watch market. The data reveals a nuanced picture of a prestigious watch brand managing different market segments with varying degrees of success. The brand shows particular strength in certain areas. The varying allocation policies and price premiums suggest a brand actively managing its portfolio, learning from market feedback, and adjusting its approach. For a manufacturer of AP's caliber, these market demands represent not so much a crisis as an evolution, a process of finding the right balance between heritage, innovation, and commercial success in an increasingly discerning luxury watch market. See you in the next video.